Okay, we want to welcome you. Thank you for joining us. My name is Jennifer Young, and I'm with the University Credit Union, and we are going to be doing our first-time homebuyers webinar. We appreciate you joining us. I have Conrad Harding, one of our mortgage consultants.
Hey everyone, I hope you're having a great day.
And we're going to work through this information and hopefully help you out and help you be prepared. We're going to be covering information relative to the mortgage loan, as well as information that relates to the real estate contract and what you can expect throughout that process. Just a few housekeeping issues. If you do have questions, we're going to encourage you to ask anything you would like. If you'll just notice on your screen the questions tab, if you'll go ahead and type those questions in, and we'll address those periodically throughout the presentation. We'll try and address most of the information. And if you do have questions, you're also welcome to reach out to us directly. On the screen, you'll see the number, the 801-481-8840. That line rings directly at the desk of each of our mortgage consultants. And so you know if you call that number, you're going to get somebody directly, and we'll be able to help you through the questions that you have. So we'd encourage that. But we're going to go ahead and get started and cover, beginning with the loan part. Now, University Credit Union has multiple loan programs available to you. We work with conventional, FHA, VA. We have fixed and adjustable rate loans, and we have short-term mortgages as well as construction and jumbo loans. So we have a really wide variety of loan programs available to you.
Being your first time with the home buying process, you want to know kind of what to expect and what to anticipate along the way. The initial step is going to be getting your application in so that you know what you qualify for, and in order to obtain a pre-approval letter. That pre-approval letter will allow you to make an offer on a home, and it lets the seller and their agent know that you're qualified and serious about the home purchase. Once you find a home, you'll go under contract, and at that point we'll work on obtaining a formal approval for you through our underwriting team. Our underwriters will also get the appraisal and title work ordered for you, and during that point we'll start gathering information and documentation to get you to closing on the home.
There are a lot of variables when you look at your overall house payment, and we want you to be prepared for that. And some of those variables include, obviously, the down payment. Your down payment's going to play a big role on, what your overall payment's going to be. If you purchase a condominium or a townhome, you may have what's referred to as HOA. Those are homeowners association fees. Those fees cover some of the amenities that are included with that type of a property. PMI insurance stands for private mortgage insurance. And private mortgage insurance may be included on your loan if you put less than a 20% down payment, which you can do as a first-time homebuyer. You can put less than 20%, but the PMI insurance is included in just as a protection to the lender to allow you to finance more of the property. And then property taxes and homeowners insurance relate directly back to the home. You get to choose who your homeowners insurance is through. You do the research and you let us know who you're going to be working with, and then we'll include that in your monthly payment. And then credit. Credit is probably the single biggest impact that can affect your payment. The better your credit score and the better your credit is overall, the better your interest rate is going to be, and the better the fees, the PMI fees, are going to be. So good credit really can impact you overall on your payment.
This scenario that we have pulled up for you just gives you an idea of the savings you have with, good credit versus lower credit scores, and a comparison of a 3% down payment versus 5% down. This is on a conventional loan. At 3% down with a score of 740 or higher, you're going to be looking at about $160 for your mortgage insurance. Whereas if you're putting 5% down with that same credit score, it's going to be about $105. So just to give you a comparison of the two down payment options there at 3% and 5%.
With the credit union actually gets preferred pricing with PMI companies because our members actually pay their loans better than other institutions. And so they give us preferential pricing. And this just gives you an idea. If you were to get based on a purchase price of $265,000 with a 5% down payment, and with a credit score of 740 or higher, with the PMI on the credit union's loan would be about $92 a month. And if you went anywhere else with another institution, you'd be looking at $125. That just tells you as a member the benefit of your membership and the benefit with paying lower PMI. And also it allows you to actually qualify for more home. So by having that lower PMI, you qualify for a higher priced home, which is a nice perk of membership.
So aside from your down payment, there are a few other items that you'll want to consider in the purchase process. Number one is closing costs. Closing costs will be in addition to your down payment. Oftentimes sellers will contribute towards closing costs, but it is something to consider. Appliances, if you're needing to purchase a new fridge, dishwasher, microwave, other items like that, you'll want to take that into consideration and budget for it as well. Often when you're purchasing a new home, you'll want to get some new furniture for your home. So that's something we always recommend to plan for as well. Near future repairs, could be anything from repairing a dishwasher or a furnace, water heater, anything like that. They do happen and they do come up, so it's something you want to anticipate. Window coverings is something that not a lot of people think about, but you want to consider the fact that you'll want to have blinds or drapes for your windows. So make sure you budget for that as well. You're also wanting to think about whether you're purchasing a condo or single family home. You'll have different needs there. For example, if you do purchase a single family home, make sure you have some yard tools to take care of your new yard.
So one of the questions that we get asked often is if somebody's purchasing a home from one of the bigger builders in town, so like a Destination Homes or an Ivory Homes or a Garbett Homes, those type of builders, if you're purchasing a home from them and they are going to have to build the home, do you need to worry about a construction loan? And the answer is no. A lot of those builders just provide the construction for you. They just want you, once the home is built, they want you to get your mortgage in place. But we want you to know that we do offer construction financing for first-time home buyers for a primary or a secondary residence. And we will finance up to 90% of the cost or appraisal value, whichever is most limiting. So if you have a piece of property that you want to go ahead and build a property on, we do handle those. And if you have questions on those, we'd love to talk to you about that further.
So why buy now? That's a great question. Interest rates are still really low right now. In addition to low interest rates, you have the added benefit of purchasing property, gaining appreciation and gaining equity in the home. Even if you're just buying a starter home for right now, it puts you in a position to buy a bigger, nicer place down the road. There's a lot of really great programs, and we're going to pause for just a minute. I paused right before the great stuff, the 100% first-time homebuyers program. But we have a couple of questions, and I want to make sure and address those as we go. So one of the questions that we have is PMI charged per month? And yes, it is. That's a good question, and that's something that we didn't address. So thank you. I appreciate you pointing that out. PMI insurance is added to your monthly payment. You do pay it monthly. And on a conventional loan, you pay that until you reach 78% of the original value or cost. So let me just kind of explain that a little bit. So if, let's just say for round numbers, that you purchase a home that's $100,000 and you have PMI insurance, you put a minimum down payment, or even on our first, well, it doesn't apply to the first-time homebuyer. So, but anyway, you put a minimum down payment and you have mortgage insurance, private mortgage insurance, and you pay that for 3 or 4 years, and you finally pay it to where your balance is down to $78,000. That's 78% of the original $100,000 that you financed. It will automatically, the PMI insurance automatically falls off at that point. Now, with the credit union, if you call us when you pay it down to 80% of the original value or cost that was established when you first did the loan, if you call us at the 80%, we automatically remove that for you. You don't have to go through the process of refinancing. You don't have to go through the process of, trying to get rid of it that way. You can just reach out to us and we'll remove it. If we can identify that you're at 80% of that original value,
then we'll go ahead and remove that PMI insurance. So thank you. That was a really good question. So yes, it's charged monthly. It's included on your loan until we hit 78%. Once it's 78%, if you do nothing more, it'll automatically drop off. So you don't have to worry about that anymore. So, but now we get to the good part. Why now? We just have announced a new 100% first-time home buyers program. And on this program, like it says, we will finance 100%. So you do not have to worry for a down payment. So 0 down payment. The only requirement that we have on this, on your part financially, is to contribute $1,500 to the transaction. And that $1,500 can go towards your closing costs. Now, we've had a lot of questions on what closing costs are, and closing costs are essentially the charges that are involved with doing a mortgage. You have a charge, you have a fee from the lender, you have an appraisal fee, a credit report fee, you have title fees, you have your first year of homeowners insurance, and taxes to set up your reserve account. When you pay your payment monthly, we would set up a reserve account that holds your taxes and insurance and pays those once a year for you. There are different costs that are involved in doing the loan, and on this program, you actually can have the seller, on any of your programs as a first-time home buyer, you actually can have a seller pay your closing costs. You just have to remember to ask for them. So on this program specifically though, you as the homeowner would need to contribute $1,500 of your own funds towards the transaction. And then everything else can be covered by your seller. And then you, like it says, you have 100% finance. You don't have to have any down payment. There are a few highlights on this though that we need to make sure that you know. So we will go up to a loan amount of $453,100. It is a conventional loan. It's not a government loan. It's a conventional loan. And we do have a minimum credit score requirement. Our minimum credit score on this is 680. There is a 15-year and a 30-year term. And the great part about this, there is no mortgage insurance on this loan. It is an in-house product that we offer, and so there is no mortgage insurance required on this. You do have to be a first-time home buyer. You do have to be a true first-time home buyer. You cannot have had ownership in real estate property at all before. It does have to be owner occupied. So it does have to be your primary residence, and you do have to occupy it. And there are no restrictions on the type of property. So we will do a single family residence. We will do a planned unit development, which would be like a condominium or townhome. All of those properties we'll do on this first-time home buyers program. So we're really excited to announce this program, and I think it will be a great product for a lot of first-time home buyers.
So now we're going to change gears and start looking at the purchase contract side of things. So when you start looking for homes, one thing you want to do is make sure your source for searching homes out has a few valuable tools that'll make things easier for you. Number one is you want to make sure that the source you use has a live feed to the Utah MLS. You want to make sure that the homes are updated in real time and that you have the option of receiving automatic notifications for new listings. Another nice feature would be receiving updating based on the homes you're looking at, whether they go under contract, whether they're sold, reduction in price, things like that. And then another nice feature would be to have the ability to save the search criteria that you're looking for as you're searching through homes and finding new homes on the market.
So Conrad, I'm going to have you show them on our website. We're going to go to our website really quick so that you can see on our website where you find this search, so that you know exactly where it is.
So we're on our home page right now, and at the top you can see the different tabs: personal, business, and membership. So what you're going to do is click on the personal tab, and then on the right hand column you'll see the home center. Below that you see home equity, first mortgages, and home refinance. You're going to want to click on the first mortgages tab, and that will take you to this screen that shows first mortgages at the top with information below. If you scroll down, you'll see on the right-hand side MLS Home Search, and then a tab that says Search for Homes. When you click on that, you'll see a window pop up that indicates that it's taking you to another site. That's perfectly normal. You can proceed past that. And then the next screen that comes up gives you different options for searching for homes. And then it allows you to customize your filters and things like that. So this is a really useful tool in searching for new homes. I've actually recently been in the process of searching for homes, and I use this to find the home that we're buying and that we've gone under contract on. So it's a really awesome feature that we have.
Great, thank you. Okay, we're going to answer a couple of questions before we go back into the presentation. The next part of the presentation, we're going to talk a lot about the purchase contract and getting it through that, understanding through that process. But we have a couple of questions. So what if in a marriage, one spouse has previously owned a home, but the other one hasn't? You know what, Jacob, thank you. That was a great question. We will actually work with you and consider you as a first-time home buyer. We do recognize the one that has not had ownership, and that takes priority. So we would qualify you as a first-time home buyer. So thank you for pointing that. That's a good question. There's another question. What about location? Say I live in New York now, how will the paperwork be processed? That's another really good question. Although we only do financing in the state of Utah, it doesn't require that you have residency here. For the 100% first-time home buyers, you would need to have residency. But if you live in New York and you want to buy a property here, that doesn't mean that we can't do the finance. We would love to help you as long as the property resides in the state. And we can process that paperwork electronically for you. That's fine. On our website, you can find where you can actually go and make application right on our website. And all of that is secure. We do that probably, I would say probably a good 70% of our applications are actually processed electronically. So it's a really good question. Thank you. Is the interest rate on the new first-time homebuyers program based on credit score? Another really good question. The answer, Kyle, thank you, is yes, it is. Because it is an in-house product, the interest rate is based off of your FICO score. You're welcome to call and talk to us and get quotes on those. They are a little bit higher than what current market is, but keep in mind, there is no mortgage insurance on it. So although the interest rate's a little bit higher, there's no mortgage insurance, and the savings we've found actually to be a little bit better, even though your interest rate's a little bit higher. So that's a really good question. So we're going to move forward with the next portion. The next portion just goes into a little bit more detail about the real estate contract. So when you make an offer, once you've identified a piece of property that you would like to purchase, you make an offer. And it's an offer to purchase. And that just tells the seller that you're serious. And at that point, what happens is the real estate agent would put together the offer. You would write a check or transfer money for the earnest money. The earnest money runs between 0.5 to 1% of the purchase price. That earnest money is protected by 4 deadlines that are actually tied to the real estate offer. And we're going to go into detail over those 4 deadlines. And then the earnest money is usually deposited with the real estate brokerage. And anything that you put down for an earnest money actually goes towards the down payment at closing or towards the closing costs at closing. So you need to know that that money isn't just being wasted. It actually is going towards your total out-of-pocket expense.
Throughout the purchase process, you're going to want to make sure that you maintain excellent communication with both your realtor and your loan officer. A few items to consider and be mindful of throughout the process would be the purchase price. You want to make sure you let the loan officer know what the agreed upon purchase price is, and that'll also be reflected in the contract. Your realtor is a great resource to make sure that the home you're buying is comparable with other sales in the area, along with market trends. And then they'll also be able to inform you of any competing offers on the property. The down payment is an important part of the structure of your loan. It'll determine what your loan amount ends up being. It can help determine what your interest rate is. It has a lot of impact on what your final payment will be. The monthly payment is a total of the principal and interest payment, your property taxes, homeowner's insurance, mortgage insurance if applicable, and your homeowners association dues if applicable. The closing costs are determined by the loan amount, and the fees will vary a little bit from one lender to another. The University Credit Union has very competitive fees, when considering your closing costs, make sure you're speaking with your realtor about that. It's always beneficial, as we mentioned before, to ask to have the seller pay for your closing costs. That's very typical, and it is customary in this market.
So through the process, when you find a piece of property, you can always ask for anything. If you see that they have a really great spa in the backyard, you are welcome to ask for it. They may not give it to you and they may not agree to it, but you can ask for pretty much anything. So you just need to make sure and communicate that to your agent and work with your agent really closely. We really feel like having an agent involved, especially with first-time homebuyers, is a really good idea. They can help you through and navigate through this experience. And it's really good to have somebody that's an advocate on your side. And that's hopefully what we can do as well with you. But just know that you're welcome to ask. If you see something in the home that you really want and that you'd really like included in, you just have to ask for it.
Moving on to the home warranty, this is applicable to any repairs you need after you've purchased the home. Your realtor and title company will both have a couple of good recommendations for you as far as a company to use. The cost for a home warranty can vary anywhere from $300, $350 up to $450 or $500. It just depends on the company you go with and the amount of coverage you elect with the home warranty. Most major systems are covered with it, including electrical, plumbing, appliances, etc. You may have to pay a small service fee for the technician to come out and visit the home, but major repairs are covered. Most sellers will pay for this if you ask, and again, that can be negotiated in the contract to have the home warranty covered by the seller, and we definitely recommend that you ask for that on any home purchase. Another nice thing about the home warranty is it covers the first year of home ownership, and then beyond that, you can renew the home warranty every year thereafter. Cost will be about the same, maybe a little bit more, but definitely worth it in the long run.
Okay, the 4 key deadlines that are going to protect your earnest money are: number 1, the seller disclosure deadline; number 2, the due diligence deadline; 3 is finance and appraisal deadline; and settlement deadline is the 4th. Now, when we talk about these days where it says 3 to 5 days out or 10 to 14 days out, those are days from when you are formally under contract. So once you have made an offer, the seller has accepted, and you are formally under contract, that's when the clock starts. That's when we start watching those calendar days and see, what kind of deadlines we're up against. And we're going to go over each of these in detail.
The seller disclosure deadline addresses a disclosure that the seller has to complete. It's 25 questions regarding the home. Some examples of the questions asked are regarding mold, termites, possible water damage, meth, etc. And it just protects the buyer in writing just in case something isn't disclosed. This is something you want to review and discuss with your realtor, especially if there are items that do come up in the disclosure. Your realtor will be an excellent resource on advising how to proceed with those items. This is your first opportunity to cancel the contract and back out without losing your earnest money.
Your next deadline is the due diligence deadline. And this due diligence deadline is about 10 to 14 days from going under contract. And this is when you really get to work on the property. You really start researching and finding out information, specifics about. You can order an inspection on the property. Now remember, this is your responsibility to cover this expense, but your agent can work with you and has multiple different companies that offer the service. And they range somewhere between $300 to $500. And this is when they go out and they really do a clear inspection, a really deep inspection on the property. And you can order any other test at this point that you would like, but remember, you're responsible for those expenses. So you can test for meth or radon or mold, any of those types of things. And then this is also at this point, once you get those inspections back, this is when you can actually go back to the sellers and request repairs. Or if they aren't willing to do repairs, you can request a price adjustment. These are all opportunities for you to kind of, make sure that you feel comfortable with the home. Make sure that you're in a position where you're excited about this and you recognize what you're getting into, you have a clear picture of it, and you're comfortable with everything. And, simply at this point, if you just have a change of heart, this is when that typically happens. This is when you can change for any reason. If they won't do repairs, if they don't do a price adjustment, if you have a change of heart, this is really your second opportunity where you can cancel the transaction and back out with no risk of losing your earnest money. So just keep in mind, you do have an opportunity through the process where you can back out simply, like I said, simply even if you just have a change of heart. So this is your second opportunity to cancel.
The financing and appraisal deadline identifies two components that need to be done by that date. One, the appraisal needs to have been completed and approved by underwriting. At that point, depending on where the appraised price comes in at, or the appraised value comes in at, you can renegotiate the price if necessary. By this deadline, the loan also needs to have final approval from underwriting, and all documentation and information needs to be provided at that point. This is your last opportunity to cancel the transaction before your earnest money goes hard. Earnest money going hard means that at that point, if you haven't backed out, this earnest money is now the seller's, and you don't have the opportunity to recoup that. Some tips for avoiding an extension on the financing and appraisal deadline are turning in your paperwork completed and in a timely manner when requested. Once your file goes through underwriting, underwriters will have what's called conditions to be requested. Those items, the faster you get them back to your loan officer or processor, the faster your file will get through underwriting and you'll be able to get approval. The loan officer will also be working closely with your realtor to make sure that we meet these deadlines and an extension isn't needed.
Okay, and then the last one is the settlement deadline. And this is typically about 30 to 45 days from when you officially went under contract. And during this time period, this is when you're going to actually prepare for your closing. So you're going to be doing a final walkthrough on the property about a day or 2 days before you're going to sign your closing documents. You're going to be setting an appointment to sign at the title company. And those closing appointments take about 45 minutes to an hour. This is really the opportunity that you're going to have to sit down with the title company and go page by page through all the documents that you're going to sign and ask any questions. Now, keep in mind, before you do go to the title company, you're actually going to be receiving a copy of those closing documents that you can review ahead of time, that you'll have an opportunity to go through. And if you do have questions, then the title company can answer. We can help you. There's just an opportunity before you actually get to the closing that you can ask those questions. We want you to be comfortable at the closing and know what you're getting into. And at closing, you're required to bring 2 forms of identification. Your driver's license is a good form, and then either a debit card or a club card. We kind of laugh. Costco is one of the most commonly used ones, all of those secondary forms work just fine. And then the funds for closing, this is when you go to closing, when you go to the title company, that's when all of the money is settled. And so that's when the rest of the down payment or closing cost is going to be required from you. If you have accounts with a credit union, that's wonderful. We'll just go ahead and transfer those for you. But if you don't, know that you're going to be required to provide either a cashier's check or wire those funds over. And the title company will typically give you details on how to accommodate that. So if you want to wire them, they'll give you the wiring instructions and go from there. Now, once you sign all of your final documents, all of your closing documents, you also need to be prepared that it usually takes about 24 hours for the deed to be recorded. On rare occasions, we have it on the same day, but most of the time, it will record the next business day. And so even though you sign, you won't be receiving your keys to the house and ownership of the house until the next business day. So just be prepared for that. We want to make sure that you understand how the process works and kind of the timing behind it. And we just want you to have a really great experience. We want to make sure that you're prepared and that you know what to anticipate. And if you do have questions, please know that if you have questions, ask them, because there really are no dumb questions. We want you to understand and we want you to be informed. And there are a lot of things that we talk about. We kind of giggle amongst mortgage lenders talk about. They have two two languages. We speak English and mortgage, and mortgages do have a lot of things that people refer to and they're confusing. So never feel like it's a dumb question. Ask. If you don't know, we want you to ask. So just feel comfortable with that. But once you finish this whole process, then at the end of that, that means congratulations. You are officially a homeowner. You've gone through the process, you've done the work, and now you're rewarded with homeownership. And we're really excited to work with, especially first-time home buyers. It's really a lot of fun to work with first-time home buyers. So the next slide just shows you how to reach out to us. You are welcome to call us directly at the 801-481-8840. That rings directly at the offices of each of the mortgage consultants. And then you've found us on the website. The ucreditu.com has a great detailed information on. It's got a lot of information from these webinars. You can also access these webinars. We post these on our website. We also post them to our YouTube channel. Additionally, as attending and registering, you will actually get a follow-up email at the end of this that will have a link to this recorded webinar, so that if you want to go back and re-listen to, you're welcome to do that. We're going to address a few more questions now, and I would just encourage, if you have any other questions, we'll take just a minute longer and answer some of the questions. So I'm going to have Conrad answer the next question.
So we have a question: is the loan officer and underwriter in-house? In-house meaning working within the company. Yes, both the loan officer team and underwriting team are both in-house. They work at the credit union. You'll have direct communication with your loan officer. I'm part of the loan officer team, so we tend to touch base with our borrowers. I usually reach out at least a couple times a week with updates. And if you ever have any questions for your loan officer, don't hesitate to give us a call. We're more than happy to take the time. The underwriters being in-house is a huge advantage for us as well, because we do have that opportunity to give them a quick phone call and present the question, rather than having to reach out to a third party and wait a day or a few days for a response. So that's a big benefit of being able to go with us. The next question: my current lease is ending by June. How early should I start the overall process, including the home search? That's a great question, and it means that you're planning the home search properly. You want to make sure you're giving yourself enough time to get your ducks in a row, especially if it's your first time buying a home. So if you want to start the process a few months in advance, there's nothing wrong with that. Even if it's just setting up an appointment with a loan officer to figure out how much you might qualify for and go over the qualification process, just to give you an idea of what to expect. There's nothing wrong with doing that early on. A lot of times I'll meet with a member and chat with them a year before they end up buying a house. So, I mean, you can never start too early. As far as the home search process, you can always look and see what's available and get an idea of what you like and what your preferences are in homes. Once you've met with a loan officer and you've submitted your formal application and you have your pre-approval, at that point you can start actively searching for homes and be prepared to make an offer on a home. But you know, like I said, it doesn't hurt anything to at least watch the market and see what becomes available.
Okay, we have one more. Robert, you betcha. I will email you the information. You've got it. We'll send you the information on the first-time home buyers program. One of the other questions we run into from time to time, most of you already know this and many may not. When you do a mortgage loan, it's very customary for the mortgage lender to sell the mortgage servicing. And what that means, the servicing of the loan is collecting the payments over the life of the loan and taking care of that collection of the payments. That's called servicing. The credit union, we actually service our own loans. And so when you do a mortgage with us, about 98% of the time when you do a mortgage with us, we maintain that servicing. The only ones right now that we're not servicing jumbo loans. So anytime you do a loan over 600, what's the new? 624, 600, they just changed the guidelines on us. So I think it's something over 624,000. Anytime you do a loan, we'll say 600,000 and higher. And then the government loans, FHA and VA, we actually do not service those. Those are the only loans that we don't service. So if you do the first time home buyers, or if you do a typical conventional loan with us, we actually service those loans for the life of the loan. So it's really nice to know where your mortgage is and that you know that you're going to be working with us directly. So that's an added bonus. Another one of the questions that we had was on FICO scores. What's the minimum FICO score that we will finance? And the answer is we can actually go down as low as 580 on a FICO score. That does require that you go with a government loan, with an FHA loan on a 580. Qualifying for a conventional loan, the difference would be your minimum FICO score is 640. Is it 640? It's 620. 620. See, that's why Conrad's here, because he knows. So 620 on a conventional loan, we can go down that low. Just remember, again, I'm just going to refer back to that the higher your credit score, the better program and the better interest rate, the better PMI insurance. And that's really what we're here to help you kind of navigate through. Again, is if you have credit that's kind of taken a hit and that's a little bit lower, let us know and let us help you through that process. Let us pull up the credit and help you look at what's causing it and what you can do to help get those numbers up. That's something that we work with our members on a regular basis, is trying to help them get their credit scores up so that they actually are in a better position monthly financially. So we really want to work with you. So reach out to us and let us help you through that process. We're going to wait for just a few more minutes and see if there's any other questions that come in. Okay, one more thing that we're going to answer really quick. So we will run, how do you know which is the best program for you? Our job is to make sure that we give you lots of different options. Our job is to give you 2 or 3 different options and say, this is if you put 0 down. This is if you put 3% down. This is if you put 5% down. This is what your interest rate would be and what your payment would be. Our job is, and this is what, if you looked at an FHA loan versus a conventional loan, our job is to give you lots of different options and then see what works best for you. You are the one that's going to know that. Our job is to give options. Your job is to choose what works the best. So just know that we're going to work through and we're going to give you lots of different options and lots of different things to consider when you first start the process with us. Jamie, that's a really good question. The question is, whose credit is the loan based on? A combo of whoever has the high or lower scores? It's a really good question, and I'm going to let Conrad address this with you.
So the way that we have to consider the credit scores is each borrower is going to have usually 3 credit scores, one from each of the 3 different credit bureaus. What we do is take the lower set of credit scores and use the middle bureau score to base the rate and pricing on. So for example, if one borrower has 3 scores and the middle score is 720 and the other borrower has 680 for their middle bureau score, we would have to go with that 680 score as far as rate pricing goes. And we can also sit down with you and compare the options of one borrower being on the loan versus both borrowers and see what might benefit you and see how that might impact qualifying. So we'll take a look at those scenarios and make sure that we do everything we can to get you the lowest rate possible.
It's a really good question. Thank you, Jamie. Another question, when you pre-qualify for a loan, how long is it good for before you need to re-qualify? Jacob, thank you. That's another really good one. So we do a pre-qualification and it's good typically for 60 days. Now I say that finding a home right now in the market is pretty tough and it usually takes longer than 60 days. And so we don't want to re-pull your credit every 60 days. What we'll do is we'll reevaluate it and see if it's necessary to pull it again. We'll see how you're doing with your home search and we'll kind of reevaluate as we need to know. But typically we can allow those pre-qualified letters to go for about 4 months. So that's really the longest that we want it. And after 4 months, we would want to re-pull and just update our credit report with a current, just to make sure that everything is still current and good. So I'm going to tell you about 4 months is what that's good for. So that's a really good question. Thanks, Jacob. So any other questions? Okay, just a reminder, we're gonna let you go, but just a reminder, if you do have questions, you're welcome to reach out to us. You're welcome to either email us or reach out on the website or call us directly. We are happy to help. Any of the loan officers the mortgage consultants can answer the questions. You're welcome to, we're all really good about texting as well. So if you reach out to us and you can't get us, ask one of the branches, they'll give you a cell phone. And most of us, if we're not in our office, we forward it right to our cell phones. So we're always reachable. But thank you so much for attending. We really appreciate it. If you have questions, give us a chance to help you out. We're really excited. We love working with, especially first-time home buyers. And this is a fun process. It's confusing, but it's fun. And we really love it. So thanks so much. We appreciate you. Have a great afternoon.